Let's take a look at some moon targets for Ripple, none of which I expect to actually come to fruition. If they do, it will be because of the market as a whole, not necessarily Ripple itself on an island in a vacuum, similar to what happened in late 2017. Although arguably there was a multi-month pattern that had a bullish bias. It just happened to break up at the right place, right time, with the general market being extremely bullish. So if we look at a few technical indicators to stay objective, now I did this for a bunch of coins. If we look at fib extensions, for example, so we take a high, we take a low, we can pick any high and low we want, and we get a 1618 fib extension, which is a value that many traders use for potential upside targets. So let's say we get a new all-time high on Ripple. Don't expect it in my lifetime, but let's say we do. We're looking at 443 as far as this high to low is concerned. Now you might say, Josh, well, this is invalidated because it went lower, so you'd have to take this high to this low. It really doesn't matter. Just use whatever you want, whatever you feel like using. That's part of the issue with fib extensions on high time frames, is that they're a little too subjective, I think, especially when there's many highs and lows to pick from. You can pick this high, this low. You could pick this high, this low. I just illustrated another one here to show the most recent high-low gives you a 1618 of 45 cents, something like that, which is previous local high here. Makes sense. Previous congestion of price here also makes sense. This doesn't give you a time component. It just gives you a potential horizontal resistance or target should we make higher highs. You can also do this to the downside if it's bearish. You can take this high, this low, and project some 1618 lower. What I should have done in the article, and I didn't, was actually look at this bullish continuation pattern and take the 1618. What I did do is show, so this is BTC on the BLX. If you take any pattern, the high and the low, it'll give you a 1618. So that with the measured move, which is just the range of the pattern, gives you this price target. And typically, you do see some acknowledgement of that zone. It's always better to have both, just to give you a zone rather than an absolute price. But almost always it'll go at least to the 1618. Actually, typically it exceeds it slightly, at least to the upside or the downside, if it does resolve. This went way higher. That certainly wasn't the expectation for the pattern alone. The expectation is always just reaching this zone of resistance and then making a decision from there. Now looking at Ripple, there aren't any patterns here that are projecting this massive upside. You could argue that this is a diamond bottom, which would yield a 1618 of 45 cents because it's the high to low of the pattern. The measured move would be much lower, I think, because it's this range here projected from this point. So you're either going to get slightly lower measured move or equal to 45 cents. So if this does behave like a diamond bottom, you could expect a 45-cent move to the upside. Looking at yearly pivots, these are drawn on January 1st of every year. They last the entire year, and they are based on the previous year's highs and lows. These aren't subjective in that they're based on math, and you can't move them around. So you can see the 2018 pivots are based on last year's, the pre-2017's highs and lows, and you got a nice support pivot here. It acted as resistance, and then you got more downside. When there's a lot of volatility year after year like this, you can see that 2017 it was completely out of all the pivots. You finally found some pivots here, and then in 2019 it's below all the pivots again. But then in 2020, as this consolidated and there was relatively little volatility, these pivots got really tight. So if you think of it like a ladder, to the upside, you're looking at, again, 45 cents, 60 cents. Those are the next two resistance pivots to the upside. As far as the downside, it's sub 10 cents, probably around 07, 085, something like that. So even though there's no historic support here, realistically, for any further downside, the yearly pivot based on the prior year's highs and lows is printing a support there. And just like there isn't any upside resistance on the prior year this year compared to 2019, there's plenty of levels on the way up. So the pivots are saying it doesn't expect price to have massive volatility because it didn't last year. Another way to read these is if it climbs the ladder all the way to the top, it typically is an outlier of a year or projects it will be an outlier. And you get this explosive 2000% move or whatever this was, and then recatches those values again and figures itself out. Arguably, yearly pivots for Ripple historically haven't made much sense because it's just been super explosive volatility or just no volatility. So these pivots don't really help you here the whole year. So then you have to bump it down to the monthly pivots, weekly pivots, that sort of thing for lower time frames. But if I'm looking at high time frames, I always like the yearly pivots to start with. And just to illustrate for Bitcoin 2014 through 2019, you can see that these pivots, tighten up, condense when there's no volatility of the prior year. And then that's your ladder of support and resistance. That was the case in 2016 and 2017. And then late 2017, broke that ladder to the upside. And there was this massive explosion, right? Similarly to 2013, massive explosion to the upside. Just outside of any resistance based on math from the previous year. Now you could always manually calculate these R6, R7, R10, R25, whatever. And there's always going to be a value there. It just doesn't show it to you on TradingView. And looking at the S1 from 2018, which was printed in January 1st of that year, you can see we magically hit that price. If you would have told me at January 1st, 2018, basically at all-time highs, that we would hit 3K within the next 12 months, I would have said, there's no way, right? There's just no way. Not because this wasn't like peak euphoria, but that's just a massive drawdown, But there it was the whole time. So it's always good to take a look at the yearly pivots, no matter what's going on with price action. This is the 2-year MA moving average down here. And in the red is the 5 times the 2-year MA. So what this will do is gives you a type of oscillator, gives you some realistic overbought, oversold conditions type thing. You'd probably have to bump this down timeframes for a couple reasons. So since 2014, it was kind of flat. 2014 to 2017, it was basically flat, right? And then all the explosion happened in less than 12 months. May to May, it was kind of done. So the MAs on the high timeframes are going to have a hard time really capturing what's going on. It says all of this is overbought, all of this was oversold, the entire post 2019 to present. So it doesn't really help you from a trading perspective. One way to trade this though is you can dollar cost average your way in when we're below in the green. You can wait till we're above the green again to buy back into a position and then sell it when we approach the red, or you can hold a certain percentage until it's below the red again, back into bearish to the downside. Again, similarly to a ladder, similar to RSI, any oscillator, we can trend in overbought conditions for a long time, right? We can trend in oversold conditions for a long time. But depending on how you want to trade this, the long short entry triggers, buy zones, sell zones can be based on the threshold of crossing from overbought to back in the channel, oversold, back in the channel. You can DCA your way out of a position up here. So it all depends on how you want to trade this. But admittedly, this specific indicator doesn't look too hot on 2-year MA parameters. And then lastly, looking at just a multi-year trend that has a time component attached to it. So kind of thus far, Ripple's been held since 2018 in this bearish pitchfork. So I wouldn't be bullish until we're back above this cleanly, above 23 cents for an extended period of time, because what Ripple's going to want to do is continually come back to this median line. And again, I give you this time component. There's an expectation that price will hit the median line July this year at 8-9 cents, months after that even lower. So as long as this trend continues, the expectation it's going to continually snake in and around this median line. So there's certainly really not been any extended periods of invalidation here. And when I see stuff sticking below a bearish pitchfork or above a bullish pitchfork. I always like to add extra wings onto this. People get really triggered when I do that because they tell me, well, you should just assume that the pitchfork is invalid if it's, above or below. But crypto gets pretty volatile. So if we add a wing here, for this stuff, then you could easily say that this has not been invalidated since it began because price was not, above this extension of the pitchfork. So that's what I'd be looking for over time. If I ever got bullish on Ripple, if you were ever looking for bullish continuation with a time component, you'd have to redraw this, likely with this as an anchor. It's possible that this is the anchor for the bullish pitchfork, and you get some sort of high-low up here that you can draw on from that, because right now it's just no hope. Bearish continuation looks extremely likely.